Hello everyone. So Article 275 is in news. Why is in news? And like what is the reference point here? The Hindu 6th August 2026, they published an awesome editorial. Everybody should read it. You know, there are some people who are like, no, Hindu is this and that, leftist. But even, it doesn't matter whether you're leftist or rightist, you should read this article, guys. So GS2 Federalism, because they will talk about something known as fiscal federalism. So federalism, division of power between center and states or even different entities. It can be center, states and local bodies. And when you are talking about this division of power from economic perspective, that is fiscal federalism. So we'll talk about fiscal federalism and again, economy related aspect as well. And this article, like this editorial, it has its root in 16th Finance Commission recommendation. So we have to, first of all, let's have a look at 15th and 16th Finance Commission comparative analysis, and then you will understand this article in much better manner. These particular parameters, they are very important from both pre as well as mains perspective, guys. So if you see 15th Finance Commission, 16th Finance Commission currently going on 2026 to 2031, Arvind Panagaria, that is the name, right? Panagaria, sir. So now his tenure, if you see population criteria, and this is horizontal devolution. Finance Commission, if you talk about Finance Commission, Article 280, constitutional body, they talk about a lot of stuff, and among one of the major recommendation is horizontal and vertical devolution. Vertical devolution means how much money, vertical, somebody is vertically above you, so how much money will be divided between center and state, that is vertical devolution. Horizontal means at the same level, so how much money will be divided among different states, that is horizontal devolution. So population is one criteria. As per 2011 census, the percentage has been increased, because if you have more population, you have to cater to a larger demography, so to say. Demographic performance. What is demographic performance? So steps taken earlier, like southern states, they were saying that we have controlled our fertility rate. So why are we penalized for it? We shouldn't be penalized. So demographic performance means if you are taking efforts to stabilize your population, you'll be rewarded for it. If you see this, India is the most populous country in the world, still demographic performance has been reduced to 10%. Why? Because our total fertility rate has gone below replacement level fertility, that is 2.1. What is this total fertility rate and replacement level fertility? So total fertility rate, how much kids a woman is producing in her lifetime. Total fertility. Replacement level fertility is 2.1. If a woman in a particular country on an average is producing 2.1, means kids, 2 kids and 1/10 of a kid, so it's basically an average. So 2.1 RLF, that means the population will remain constant. If total fertility rate becomes more than RLF rather and becomes more than 2.1, population will increase, and vice versa. Because India's total fertility rate has gone down RLF, replacement level fertility, that means our population will decline now. Our youth population will decline, our aging population will increase. So anyway, population control is not a big issue now. We are controlling it. Naturally, it is also happening. Area 15%, 10% forest. Then per capita GSDP distance, that is known as income distance criteria. Income distance means, let's say Goa is the most rich or is the richest state in our country. Bihar is one of the poorest. So they will see per capita GSDP distance of Bihar from Goa, and because it is far away, so they will be given more money for it. So again, per capita GSDP, you see the percentage has been reduced. Now, focus. This editorial is talking about this point. This is a key point, and then tax and fiscal effort, contribution to GDP. Who is contributing more? Again, southern states, they have one concern, like, they have less population. Why are they penalized by this population criteria? They are contributing more. Why are they penalized by, per capita GSDP, and they are contributing more? Why is that not taken into consideration? Why they are getting less money? To allay those fears, 16th Finance Commission came up with this contribution to GDP criteria. Southern states, Gujarat, even like Gujarat is not a southern state, but I'm just saying the states where you have manufacturing units, Tamil Nadu, Karnataka and all. So you can see here. But in economy, there is no one right answer, so to say. Many people say inflation is bad, but according to Phillips curve, inflation and unemployment has an inverse relationship. So if you have a little bit of inflation, that will incentivize companies to produce more goods and services, thereby employing more people, thereby decreasing unemployment. So again, inflation and unemployment has an inverse relationship. Some amount of inflation is needed. Similarly here, to allay the concerns of southern states, the article is saying that because you have reduced per capita GSDP, you have introduced contribution to GDP. What is happening here is poorer states are suffering to a certain extent, and there are other things you have kept constant. Like, let's talk about this whole thing now. So this particular article we have talked about it. This is in page 6 editorial. Let's talk about the main issues now. You have seen the parameters. Article argues the 16th Finance Commission has changed the way money is distributed. So now poorer states are suffering to a certain extent. We'll talk about it. What has changed? State will continue to get 41% of central tax. So again, it's a divisible tax pool, guys. Divisible tax pool means there is a gross tax which center is getting. Let's say it is rupees 100. Out of those gross tax, let's say 19 rupees is cess and surcharge. Cess is for specific purpose, health, education. Surcharge is tax on tax. So that 19 rupees, you take that out, you're left with 81 rupees. This is divisible tax pool. Out of this 81, 41% is given to state. So you can see how much money center is getting. This article is saying that slowly and gradually you have, and what also you have done is that you have taken away grants under Article 275. And that's where we have to read. So apart from this 41%, earlier you used to give grants to state based on their, concern. What are these grants? For that, let's try to understand. Article 275. So we have understood this particular horizontal devolution formula. Now let's have a look at certain stuff and then we'll come back to this article again. Hopefully you can see it. So you see Article 275, it provides grants and to different states based on their concern. It varies. So there are different types of grants. One is like revenue deficit grant. What is revenue deficit? So just like center has revenue receipt, revenue expenditure, state has revenue receipt and revenue expenditure. So if your revenue expenditure is more than your revenue receipt, so you will be in deficit. To address that, government will give you some money. Sector specific grants, maybe states like Bihar, UP, they need more money in health and education. That is sector specific grants. State specific grants, northeastern states, they invest a lot in infrastructure. Those get destroyed because of flood and other reasons, so they need, like Kerala, they have invested a lot in education. Many people have went abroad, sent remittances, but it has stressed Kerala's, like the whole balance sheet. So that is state specific grants. There are two other grants under Article 275, one for local bodies and one for disaster management. What government has done, they have like 14th Finance Commission, they provided these grants, these three. But in 16th, 14th and 15th, in 16th, they have removed revenue deficit grants, sector specific grants, state specific grants, just local bodies and disaster management grants are there. So you are not sharing cess and surcharge money. This article is talking about and saying center that you are not sharing cess and surcharge money. That is going in your pocket. You have kept the divisible tax pool, like horizontal devolution is only 41%. You are not increasing state share in this whole divisible tax pool. It is constant at 41%. And at the same time, you have also reduced or taken away these grants. And at the same time, you have also, taken away or introduced contribution to GDP and all those criterias. In a way, poorer states are suffering more. So you can understand, we are not saying that allaying the fears of southern state is not needed, very much needed. But as we are understanding here in economy, there is no right or wrong answer. If you do something for one people, other people is impacted to a certain extent. Here, you can replace people with state. So different states have different challenges, you can see. And that's why these grants were needed. And they were not like one size fit all approach. And they were not like every states were getting a particular income, a fixed income. It varied. And you had seen different types of grants. Why did the commission recommend or remove them? Because they are saying that states are becoming too dependent on center, and that should not be the case, and that's why they removed these grants. Article is saying that no, this is not correct. You're not sharing cess and surcharge, you're not increasing state share from 41%, and then you, like poorer states are impacted by 16th Finance Commission recommendation, and then you have also taken away grants. Major grants, 3 of the 5 grants under Article 275, not done at all. Commission was strict with state but did not strictly recommend or strongly recommend reducing cess and surcharge. People keep on talking about that. Please share some money from cess and surcharge government, central government, because it's very, inequitable. If you see this, most of the money, taxation power is with center, but most of the investment which will be done in health, education and all is done by states, but they don't have the like taxation power. After GST, it has reduced further. So all these things are piling on, and let's see how. But the positive aspect is panchayats and municipalities under 6th Finance Commission, they have got a good money, and the grant given to them has also not been removed under Article 275. So hope you are understanding what this particular article is talking about, good things and bad things. What is Article 275? Most of the people know about Article 280 related to Finance Commission, but here we are concerned with Article 275. Removal of key grants, 3. Revenue deficit, sector specific, state specific. Hope you understood the basic difference between these 3. We'll solve some question, you will understand it more. This is the article we are talking about, guys. Page 6 editorial, GS2 Federalism, GS3 Economy. Fiscal Federalism, efficiency versus equity concern. So yes, Let's see some question. Again, this is a static question where polity and economy are merging. Which of the following shall cause every recommendation made by Finance Commission to be laid before each House of Parliament? The answer is President of India. He does that. Again, a basic point which you may have read in even Lakshmikant as well. PYQ2. Hope you can see it. Consider the following 5 criterias for the horizontal tax devolution. 15 Finance Commission used how many of the above? Apart from population, area and income distance. I have just shown you 15 Finance Commission recommendation. There is no governance reform there. There is no stable government there. Other 3 are there. So the answer is B, only 3. Very good, guys. Focus. Then MCQ 3, reference to Finance Commission, constitutional body, yes. Constituted under Article 280, yes. Constituted every 5 years, yes. Sometimes even earlier. So yes, that statement is but true. You don't go too deep into statement 3. All 3 statements are correct. A. MCQ 4, which of the following articles provides for grant in aids to states in need of assistance? 275. Then consider the following statement regarding revenue deficit grants recommended by Finance Commission intended to bridge the gap. They are not provided to all states uniformly. It depends whether you have revenue deficit, whether your revenue expenditure is more than your revenue receipt. So third is wrong. If you eliminate third, you are left with A and C. Second is correct. So the answer is C. It is C, guys. Next is MCQ 6, which of the following best describes fiscal federalism? Distribution of financial power and resources among different levels of government. That is the best option here when it comes to fiscal federalism. MCQ 7, horizontal fiscal imbalance. We have discussed horizontal devolution, fiscal devolution. In that regard, try to guess the answer of this question. If you know the answer, you can post it in the comments section, and you can get these PDF from my Telegram channel, Fun Study with Shubh. So you can join that. Again, guys, you can join this P2I batches. You can see the admission closing and all. You can have a talk at this particular number, 764000300. You can ask whether there are, sometimes people are working, they are comfortable with evening batch or morning batch. This is based on smart model. I keep on telling people, don't be a hoarder. Hoarder means sometimes what happens, people when they're initially preparing, when you become serious enough, you realize your time is important, what to focus on and what not to focus on. Initially people are hoarder, like collecting material from here, there, everywhere, and then they get, oh my God, they get overwhelmed and they don't study from anywhere. Don't do that. You need a structure guidance. You're preparing for one of the toughest exam in the world, if not the toughest exam in the world. So you need a guidance, you need a mentor, you need answer writing, you need somebody to evaluate it in a honest manner, and in that regard the smart model will help you. Structured classes, mentorship, assessment, revision and test. Prices starting at 11,999. You can use my code SHS Live to get maximum discount. Cool. And again, if you have some issues, monetary issues, you can pay in installment, any other queries, call on this number. Don't think that I cannot pay the full amount, so I shouldn't be going for it. No, ask them. See, sometimes we keep things inside our heart, but if you don't tell it to people, how will they know? We are not Sarve Sarva, So yes, means who knows all. So 764000300, call. You can tell them that I told you to call, and you can use this code or what. You can talk to them about anything and they will guide you. So that's it from me, guys. Take care, be blessed. I will see you soon.